before we get started, make sure you subscribe to our channel. And if you're on YouTube, make sure you click on the bell notification so that you get notified of all of our upcoming videos. All right. Welcome to Real Estate Life 360. Today in this interview, I have with me Adam Levine with Levine Capital Management. Is that right? Just wanted to make sure.
Yeah, it's Levine Capital Management. Levine Capital for short. Levine Capital Management. Same thing, but you got thank you.
Right. So Adam is going to go over, and it's a slide presentation, PowerPoint. It's going to be approximately what 15, 20 minutes around.
Yeah, I'll try to hit that time.
So we're going to talk about how to invest passively for up to to get up to 20% return. So can you just kind of give me a little back? Maybe I think it's part of your slide presentation, and so why don't we just get right to it, and we'll and then what I'll do is afterwards I'll have a Q&A, and I'll address some questions that I may have, or maybe the audience may have. And why don't you just take it away right now? All right.
All right. I'll open up the slide. Give me a second. Okay, share, present. Okay, so this is me. Maybe I'll update that photo eventually. This guy's almost a year old. Hopefully I don't age too much. So basically, how to invest passively. I mean, can you get up to 20% return? Absolutely. I mean, I'm sure you could Google on the internet and you'll find returns, maybe even higher. You just have to be careful. There's a lot of crowdfunding sites up there that you could invest, and to be honest, a lot of them are just brokers, meaning they're making a deal with a sponsor. They're not contributing any co-investment with you. They're just basically making a deal as a feeder vehicle into another fund, and in that sense, they're making fees off it. They'll make a deal with the fund manager and say, hey, can you reduce your fee on your end and share some of the promo with me? And then it's like a club deal. They'll just aggregate capital from multiple investors. They're not putting any money in, and then they're just, and then that capital is just basically invested into the master fund. So they set up feeder vehicles. With me, I'm a little bit different. But let me go over my background. I don't want to jump ahead of everything. So these are just some disclosures that I have to throw out there to protect myself. We're not soliciting or offering any type of securities on here, and there's no guaranteed returns. There's always a risk when you're investing in anything you invest in. There's always a risk. You could lose everything. And, by no means I'm not making any recommendations on investment advice or giving any legal or tax advice, so always consult with a professional on that. So I have to throw this out there. So this is a little bit about me. As you see here on the right, this is actually my I was in high school, my senior year. That was an exciting match. And I actually won that match. It was a tough match. He's a good wrestler, but from Frio Township. I remember my buddy JB Juvenazzo. He's the owner, E-Clean Bro. He was on his team, and I remember this is back in the day, the exciting days. So I threw this out there. I really miss wrestling a lot. So I graduated from Wilkes University. Actually went to Montclair State first, wrestled there for 2 years. They dropped the wrestling team, and then I transferred to Wilkes University, wrestled there, got hurt, so kind of had to stop wrestling because I broke my leg, and it was really freak accident. But I ended up graduating with my business degree. And then in 2013, I was always involved somehow in watching my father with investing somewhat through stocks or through owning properties. And I was always kind of like his little apprentice in a way, always hearing him on the phone and emails and meetings, and really, I'm blessed. I really had an opportunity that most people didn't have. But honestly, I was lost. I didn't know what I wanted back then. I didn't know what I wanted. But then I started working for a developer back in think 2013. And that's where I really developed my passion. And I really I wanted to focus on real estate. So actually that's where you see in 2018, actually graduated, got my master's in real estate management, but really working for this one developer helped me want to pursue my passion in pursuing my master's in real estate property management. And I graduated in 2018. The reason why I took so long is because I was only taking one class a semester. I actually took a year off because I thought I could be a day trader in stocks. And thankfully, I thought I was a genius when I was trading. I did well, and then I had that beginner's luck, I guess, and then it helped me go back to focusing on real estate, and I ended up finishing my master's. I actually finished it when I was in Brazil too. I remember I did my capstone in Brazil, and then 2020 or 2018, I basically what I did was because we were always I guess lending. Like my father and myself, I would lend sometimes with him. I mean, obviously he's the bigger check writer than me, and we lent with other hard money lenders, and I really started to understand how private lending works, and I really studied it a lot. And I studied the capital markets, basically where the money's going, the inflows, the outflows of, you don't have to hold on the loans. You could actually sell the loans off, and you could transfer your risk. So that's how I partnered up with Arcad Group to launch Arcad Capital, because my specialty is not construction. I know a little bit, but it's not I understand the financing part of it. So I partnered with them just to, leverage multiple, we all leverage each other. And this is just a way to scale up the business of lending. And we've been doing it for a little over 2 years now. Time's flown. So Levine Capital, right? So going back to my father investing, it was always just him. He would invest with some other family members, and mostly just him. And what I did was I created. I changed my model a little bit recently, about a year ago, to start allowing investors to invest with us. We're based in New Jersey. I brought my wife as a 50% partner with me. I want to really grow this with her, and she's amazing. She comes from an auditing background for PricewaterhouseCoopers. She's a senior associate, so she brings a lot of skill sets that I don't have, or I'm not really interested in, like auditing and all the that stuff. We're a private equity firm. Basically, we're equity investors. I may launch debt vehicles in the future, but right now I'm focused on equity. We offer investors to an opportunity to invest alongside us in institutional quality real estate funds. We're always invested with you, unlike other companies where they're basically, like I mentioned before in the first slide, that they're basically brokers. They're just making a deal, and you're investing in their fund, or it could be one deal at a time, or a fund, and they have no dollars at risk. We have our own dollars at risk. I have, or my family, my father, and we're investing with a sponsor or another fund, and we're aggregating our own capital, and we make a deal saying, hey, now you could invest with us. You could take advantage of our capital committed and our relationships, where you can invest with us with a lower amount of money, lower than typical minimum investment, and you could also achieve a higher return on equity. This is my website here, levinecapital.com. You could check us out. So right now I have two strategies, and I'm really excited about both these strategies. It's actually really interesting. The co-investment with TCS Homes is it's really, really exciting to me, because I'm more active in this strategy. I'm a limited partner. I'm investing my own money in the deal. My father will be investing too, and other investors with me on my side of the deal. And I'm active. I'm not just a passive entity. I'm actually going over the budgets. I'm helping building out the models. I'm helping with all aspects of the investment. And we're dealing with seasoned operators with nearly a century of combined real estate experience. And it's focused on affordable housing in Philadelphia. Their goal is to do something similar to Blackstone. They want to buy up thousands of single-family rentals, could be multifamily, 20 units or less. They want to stay off the institutional radar of acquisitions of assets, and their goal is to buy up thousands of houses, and eventually they want to hold it. They're not looking to sell; they want to turn it into a REIT, eventually, or they'll bundle them up and eventually maybe, or later down the road they'll sell it off as a portfolio sale. But they want to hold these for a longer time, and my goal is to really scale up this business with them and really grow with them. And I'm inviting investors to invest with me. They're vertically integrated, meaning they manage everything in house. Property management, construction. The only thing they don't manage is, they don't control, or they don't do is subs. They don't do the electrical and plumbing or stuff like that. They'll sub it out, but everything else they do in house. And I could give you more information on that. It's a very exciting opportunity. And the Levine Capital Aggregation Fund is basically, it's a feeder fund. My family has a lot of money invested with the sponsor, and basically, I made a deal with the manager and said, hey, since we've been investing with you for the past 10 years and we have a lot of money invested with you, can I create a fund that invests into your fund, and I'll allow investors to invest in my fund to invest in your fund, and instead of investing your minimum amount, they can invest $10,000, and could also get a higher return as well on my end. So we made that deal. Took some time. Made my first deal. I didn't even know. I honestly, this was all very new to me, and I made my first deal with them, which is really exciting as a feeder fund. And it's an interesting model because their fund pays a higher return because, in essence, what they're doing is, they're allowing investors like us to participate on their general partner, on the GP side of the deal as a general partner, meaning that there's always a co-investment. It could be 10 to 20% on their end. And basically we're invested with them. So they put up 10% co-investment, as the sponsor, we're contributing to 50% of that. So it could be 5%, or if it's 20% co-investment, it could be 10 and 10. And generally the returns are higher on the general general partner side of the deal. I can always touch on this more. I don't want to overcomplicate it, but okay. So the Levine Capital Aggregation Fund, the sponsor is focused mostly on multifamily. They do have some single family for sale houses and some condos. It's about 20% of their portfolio, but they're really going to start focusing on more on multifamily. That's their goal. Right now, they have about $700 million worth of real estate in their portfolio that's expanding through the Northeast and Florida. I know northern New Jersey, they're doing deals, Brooklyn and Florida, and Philadelphia. This is a seasoned sponsor. They're vertically integrated. Their capital partners could be either an institutional investor or EB5. And they have tremendous liquidity. They have a tremendous track record. They have a competent management team. I've seen their financials. Right now, they're working on getting their preliminary financials until they're audited. And I'm very comfortable with them. My family's heavily invested with them. It's a confidential deal, meaning you will have to sign a confidentiality agreement because they don't want my deal being passed around to the public. Because if you invest with me, you're going to get a better deal than just investing directly with them. We aggregate a significant amount of capital, of our own family capital, and where you could invest less money with me and you're going to get a higher return investing with me than going direct with them. And feel free, you can always reach out to me for more information on this. One of the benefits of investing in the Levine Capital Aggregation Fund, or typically most of our funds, you're paid first before the sponsor's paid, or we're paid first, right? Because we're not the sponsor. These are institutional quality, meaning they mirror institutional levels of investments and returns that an individual can't achieve alone. Meaning, like, you're basically I'm taking advantage of the sponsors' relationships, their track record, the capital they have, where I can't do it on my own, and most people can't do it on their own. So by investing with me, you're leveraging our capital and and then we're together leveraging the sponsors track record, the amount of capital they have, their relationships. There's a lot of moving parts that we can't do alone. There's a lot of mitigated risk, meaning that especially with the aggregation fund and both funds, there's multiple properties in the fund where you're diversified in multiple regions, types of assets, and investment life cycles, meaning that especially the aggregation fund it's in, like I said, it's in the Northeast, it's in Pennsylvania, Florida. They're going to constantly buy, build, sell continuously. So they're going to add like 6 to 7 properties a year in the fund. And you're diversified, meaning that if one property, let's say if it doesn't pan out to where it should be, well, the other properties will make up for the loss. And that's really, when you just invest in one asset, if that deal falls apart, that's it. You lost. You lose money. You didn't make the expected returns you thought you were going to make. When you diversify with multiple assets in the fund, you're spreading out the risk. That's what I like. That's why I like fund structures better than just individual one deal at a time. So here's some more benefits. So you're going to have superior risk-adjusted returns. You get substantial returns of about 20% without any additional risk to its investors. That could, look, it could be like 8 to 20%. Depending upon how much. Not every investment is going to be 20%, and obviously, if you want to get the 20% return with me in the aggregation fund, you're going to have to invest more money. And I could share that with you, but the returns are there. And this is focused on the aggregation fund right here. I should have had that in the slide. The reason why this, like I said, the returns are higher is because the value creation is made in the creation phase. When you're building something from the ground up, and when you sell it, that's when you make the most money. It's not when you buy something that's already cash flowing and you're doing a light renovation or no renovation. You're not really making the big bulk. The big bulk is, especially with development deals, is when you're buying, you're building, and then in this case, we're let's say you're building a 100-unit apartment building, where our end buyer is a pension fund. That's who's buying it, and the goal was to build, buy, and sell it right away. If they don't sell it right away, they're going to cash flow it until they sell it. So that mitigates risk. And there's and like I said, going back, there's the capital partners are typically institutional investors or EB5 investors. Those are our capital partners. We're going to be on the GP side, about 10 to 20%, and the rest will be an institutional capital partner, and then there'll be debt, a senior lender. Okay. So how does this fund achieve the 20% return? So I touched on this before, but I'll go back into it a little bit more. As I mentioned before, when you're investing on the GP side, the general partner side of the deal, there's fees involved and there's a share of the promo. We're sharing some of those fees, and we're sharing part of the promo and the cash flows of these assets. Obviously, we're going to be capped at 20%, and the sponsors taking the rest. But that's how it's attainable. And obviously, their capital partners who are LP investors are not making the same as us. They're going to make less because they're a different side of the deal. The promo is basically just an incentive, that depending upon how the deal performs, the developer would take like a piece of. They have incentive to make sure this deal performs, and then they'll make a certain profit. So we're getting capped at 20%. There could be more returns, but they want to make sure that this achieves a certain that it performs hits its certain target returns or hurdles, and then eventually they'll cap us out, and then they take the rest. But they want to make sure it's performing so they could they can make their promo. And the GP, so GPs, like I said, in this fund, they're required to probably put about 5 to 10% of the required equity. They could put more. It could be max 20%, but they're going to try to always stick to about. So this is actually wrong, this slide. I'm sorry. This is supposed to be the GP is required to put about 10%. It could be about 10 to 20%. We're always going to be 50-50 on here, on this slide with the sponsor. So if it's 10%, we're putting up 5, they're putting up 5. If it's 15, 7.5, 7.5. If it's 20%, 10%, 10%. We're splitting the GP co-investment before the limited partners or the either EB5 or the institutional capital partner and then the debt. As I said, we're going to earn a much greater portion of the project return upon successful execution of the business plan. So, and this is just basically more stuff. I don't want to keep on going over the same thing, but so I don't want, this is basically, I'm just touching on the same thing that I spoke before. Okay, so this is really important. Now, the question is why invest passively? The reason why you want to invest passively versus being an active investor is because if you have a full-time job and you don't have time to manage your deal or have an eye on it, you're going to lose money because you may have a phone call from, it could be a contractor, the property management company. If you're not there to take it, you don't have an eye on it, you're putting yourself at risk. Another factor is you're leveraging our capital that we're investing to go into this fund. Maybe you can't do it on your own, and we're leveraging the relationships of the sponsor, what they have. I mean, they're doing everything from getting, firing the property, getting it, the building phase of it, to dealing with the banks. They're doing everything on their end. There's a lot of moving parts to it that maybe we can't do on our own. I mean, we're not, maybe, we can't get a $50 million construction loan and we can pull off a 30, 40 or $100 million project. We can't do it on our own. So we're leveraging their track record, their financials, their ability to obtain the financing and everything in between that we can't do on our own. So basically, the last bullet point is, you could invest passively. There's multiple strategies you can invest. Right now, we're doing equity deals, but you could invest in different strategies. It could be debt, it could be equity, it could be preferred equity, it could be some type of mezzanine financing, it could be a B piece, it could be there's different parts, but I don't want to get really involved in that. Common questions and answers, like how much is the minimum investment to invest with the aggregation fund? It's $10,000. To invest with the co-investment with TCS Homes, it's $25,000. And the aggregation fund, it's an evergreen fund. The master fund's an evergreen fund, meaning that it's a definite. The fund never ends. It's ongoing. The co-investment with TCS Homes, we're doing a deal by deal basis, meaning that we're closing on fund number 2, and then once we launch fund number 3, we'll let the investors know, hey, we have this new fund that we're raising money for. Would you like to invest with us? So it's more deal by deal. The aggregation fund, it's ongoing. The master fund's an evergreen fund, and they're constantly going to be buying and selling, and we could invest in it whenever we want. Now, one question: do you have access to the private placement or offering? Yes, you do, but we will need to have investors sign a confidentiality agreement. This is not because that I want it; it's because the sponsors, they want that before we disclose any information. And another thing that we really touch on that I don't know if every other person, like, what I really focus on, like due diligence, I think it's very, very important. And I always encourage investors to perform their own due diligence, to even speak with the sponsor directly. I'll I'll be on the phone with you if you want. I'll come to the meeting with you. I think it's very important. And I cannot emphasize that enough. And so really to get started with us today, I would recommend, you go on our website, you fill out a request access form on our website, and then I'll send you a confidentiality agreement. Once you sign that, I'll give you access to our investor portal. Also, we can schedule a call or a meeting, and then and we'll find out what your goals are, and obviously you would have to be accredited to even invest with us, because right now we're only accepting investments from accredited investors, meaning that you have a minimum income of $200,000 if you're single, $300,000 if it's combined income if you're married, or you have $1 million in assets, not including your primary residence. A really simple way of verifying your accreditation is just have a letter from your CPA. It's very simple, stating that you're an accredited investor. And then once we do that, then we could always call, set up a meeting with the sponsor, or we could meet with them in person. And thank you so much. You could check out my Instagram, my LinkedIn, Facebook. What is this?
Website.
Oh, my
That's our
website right here.
website.
Okay, got it.
Well, we'll provide all that information. But yeah, thank you for this great presentation. There's a couple of questions that I before I get to those questions, just want to let everybody know that please do your due diligence in Real Estate Life 360 and myself. We don't back this up in any way. We provide this as information to our community. And as Adam said, you got to do your due diligence. Especially when it's your money you're putting into any investment. Okay, you got to do your due diligence. So I think one of the first questions that I had, Adam, was like, why should people in our community, or for that matter anybody that's watching this video, why would they want to invest in you, or why listen to you? And I think you answered that before, was as you're investing your money into this fund, I guess investing your money.
Okay. So it really depends upon your goals. If you're an active investor and you want to be involved, I get it. Then this isn't for you, right? This is more for passive investors. But what I'm doing with TCS Homes is a little bit different. I mean, by all means, I'm active, so if you want to be there with me to learn, that's fine. I'm going over the budgets. You want to go over the budgets with me and go over everything, that's fine. I'm already doing that with a few other investors already.
Right.
Our second fund and third fund. So another reason why you're gonna invest with me is you want to be passive. You don't want to do it on your own, or you just don't have the knowledge, you don't have the time. I know people that invest actively, and then they one deal doesn't go well, and now they realize I can't do it. I don't have the time. But,
Right.
And,
no, I totally understand that, because I mean, there was a period of time where I had like a dozen properties, and yeah, that was like it was like a full-time job trying to manage those properties.
Oh yeah, it is a full-time job. Especially when I know a lot of people, they want to start flipping houses and they think it's easy. It's not easy. It's actually very risky. It's speculative. You're
Right.
speculative. You're building without an end buyer in place, and you're hoping this thing sells within less than 12 months. And you're taking on debt, or you're raising money from private investors. So another factor is there's a lot of I could go in more. There's a lot of bad sponsors out there. There's a lot of gurus. There's a lot of people speaking at these events that are honestly like, I don't want to say anything negative, but be very careful. A lot of it, there's a lot of phoniness out there. There's a lot of, you could just Google, there's Ponzi schemes all over the place. I met some of these people. I went over to my last webinar. Just always be skeptical. And really, and honestly, the reason why, one reason to invest with me is I'm invested with you, or my family's invested with you. So we have our own money at risk. Like I said, we're not just someone, we always have skin with you. And another thing is you're dealing with a higher level operator or sponsor, someone that's controlling the investment. You're dealing with someone that just started flipping houses a year or two ago, and now he's an expert. Now he's looking to raise private money from someone. you know, you, you just have to be very careful with that. And I could touch on more of that later.
Yeah, I mean, I think that's definitely. I mean, just like I said before, I think, it's very important that you do your due diligence, but most importantly, if you decide you're gonna go invest with Adam Levine with Levine Capital, meet with him, go over everything that any questions you have, any hesitation, and then and you provide all that information, I guess, after you sign the non-disclosure agreement, right?
Absolutely. I mean, look, the seed investment, yes, I would need to have a confidential agreement signed, but by all means, if you want to have a conversation and talk, I like helping people. Maybe I'm guilty. And I've heard I gotta stop wasting my time because it's very valuable, and I'm guilty because I give a lot of time to people, and I enjoy really helping people.
Right, right,
That's why I really created this, because I see where the industry is going. And I've been told I should really put myself out there. But I mean, it's like being on this live webinar. I'm not comfortable. I'm really not. I like to
right,
be behind the scenes, but I'm trying to get out of my comfort zone.
right, right.
I'm going to Cardone's conference, 10X, this
10x,
week.
right?
And that's just kind of just to help me change my mindset, because I got, I'm always open to learning. I'm always studying, and I like to study people that are successful. I know Cardone, he's successful. The guy, he's running a large private equity firm.
Right, right,
And I read his book. I read multiple of his books, and I do envy him. I think he's doing something really great, and there's a lot of others doing great stuff. And then like Daniel Edry, who's he's one of the managing partners in the Aller family. These are very high level
players.
yeah.
Yeah.
Okay. They're not the guru on
Right, right, right. But
they're not like that selling courses. These are, I mean,
these
you're
are
dealing
people
with,
that are actually doing they're,
and not only that, they have wealth.
yeah,
They have real wealth. We're talking about one of the largest real estate families in America, the Aller family. They're one of the largest landlords in the United States. They own, and look them up, Daniel Edry.
hmm,
Has over 25 years of experience. He started out as a lender back in the 90s. These are the people that I want to learn from and I want to invest with.
right, right,
And they're not on Facebook showboating fancy cars and whatever. And look at me. They're different caliber, and they're very humble. They're likable
right,
people. And I just really, I feel honored and to have the opportunity to be part of what they're doing. So to invest directly with them, you have to invest a significant amount of capital. With me, I'm saying, hey, you can invest 25,000. And I'm going to be invested with you. And by all means, like I said, if you want to learn, it's fine. I have another
right.
investor. I don't know if he wants me to share his name, but he wanted to learn how to flip houses. And I was like, look, be careful, because, and he was sharing to me, because he works a full-time job. I was like, look, I mean, you could lose money trying to flip a house and dealing with a contractor. That's where you lose your money. Obviously, you make money on your purchase, but then you're, with contractors, and as you know, with contractors in New Jersey, there's no restriction.
Well, it's not just New Jersey. It's just
But New Jersey is just really a joke. I mean, anybody can become a contractor. It really,
right, right.
there's no barrier to entry.
Yeah,
And so I said, so basically he's just so excited now, because I got him to think differently, because a lot of people just don't know, and he sees what we're doing. We're not buying one property, we're buying 15 properties.
right. Well, so I mean, I think one of the things that just sorry about interrupting you, but I think you see on social media, you see on TV, you see all the good things, like the positive things that people are closing or making money off of these deals, but you don't hear the ugly stories,
Oh,
So
there's a lot of I seen ugly stuff. I seen it happen, and no one talks about the ugly stuff.
yeah,
I've learned from mistakes that happen. I trust people.
right,
I'll go on a deal on a handshake, and you get let down, and
yeah,
eventually, you learn.
yeah,
And so there's a lot to learn in this business. And to be honest with you, like, it could take a lifetime just to learn one asset class. Like,
it
for me,
is,
I have
it
a
is,
master's in this, and I still feel like I'm hungry for more knowledge and to learn from other people. I'm always reading. Ask my wife, Gracie. I'm always reading. I'm not watching
Right.
Netflix or
Same here.
music.
I mean,
I'm studying 24/7. I'm always studying. And
I've been in this business since 2004, and like this is one area, like with syndications and with what you're doing, private equity, it's very new to me, and so I am interested, and that's one of the reasons why I brought you in, and you're a sponsor for Real Estate Life 360 as well. Um, but
I appreciate that. Thank you. That means a lot to me because for you to put yourself out there, to have me, it's a risk in your end. It's your reputation. So I really thank you. I feel humbled that you invited me on here. Thank you.
Yeah, I mean, and just want people to understand that the people that I bring on, we do vet them to a certain degree, and so, but by all means, everybody, should do their due diligence, but we do our best to try to vet the people, the people that we're interviewing, and with Adam and Levine Capital. But before we end it, and I'm sure when you know, this is actually supposed to go live, but we're not. We've actually recording it. But any comments or any questions, I'm sure you're gonna answer them, or we'll try to deflect any of the questions to you. But I usually like to have a social minute, and so after each interview, so that we can get to know you personally. So these are kind of like random questions that I'm going to ask you. That let me just switch back to.
Oh, I didn't even prepare for this. You're gonna go.
So you can what you can do is take the share screen off,
All right. Let's hit it
and
on.
then
All right.
we'll go into gallery. All right, so.
Off?
I'm gonna ask some random personal questions, and you can just answer them quickly as possible. So right off your head. So
Yeah.
favorite social platform.
What's that?
Favorite social platform.
I like LinkedIn. I think LinkedIn is really something that people should focus on. It really depends upon what business, but I mean, I maxed out at 30,000 connections. It took me years to
I
get.
can't believe you have 30,000
I
connections.
can't believe it. And now I'm like deleting people, which I feel bad. I may just create another account, to be honest with you. That's my favorite. I think that it's really um, to me, it's more professional, and especially with my business, you're dealing with the target market that I want to share content with. Facebook's good too, but I think LinkedIn's my favorite, to be honest with you.
Okay.
Everybody.
Favorite TV or Netflix series.
Um. So. Oh yeah. Okay. So Netflix. Wow. I was just watching something with my wife because, like I said, I don't really watch TV, but we watched something. What's the name of that show? Oh, uh, the one Money Heist. That show is great. I
Money
started
Heist.
watching Money Heist. Yeah, it's on Netflix. It's like it's a show in it's a different language, but it's called I can't even pronounce it. Um, but they had their second season. Now we're just excited to go on to the third one. But that show, it's amazing. I started watching it in Brazil. It's called Money Heist, but it's another name in Spanish.
Okay.
But definitely, if you haven't watched it, it's it's a good
Now I
show.
got a lot of so um favorite movie.
Um, oh, favorite movie. Man, that's a tough one now. Favorite movie. Wow. Uh, there's so many good movies out there. To be honest. Um,
A classic one.
you know what movie I really liked growing up? I mean, it's crazy. I like Goodfellas. That's a really good movie. Growing up, I watched it all the time. Um, and there's some other movies I can't think of that I like. Uh, I'll get back to you on that one.
Okay.
I'm just drawing a blank. There's so many movies out there that I can't even. Yeah, sorry.
All right. So coffee, tea, or water.
I love coffee. I love water too, but more of a coffee connoisseur. I love tea too, but like I go like a little overboard. I'll start like trying like different coffees, like Kona
Okay.
coffee I love, Jamaican Mountain Blue. Because I like going to like small Italian coffee shops where like they have like their specialty coffee, or and like my wife and I will go to like places, we'll order like like we love coffee.
Nice, nice.
um
Okay.
Making Mountain Blue. There's this other one that I want to try. It's I forget the name of it, but it's the craziest thing. It's like an animal like eats the coffee bean, and then like it comes out of them, and then I guess they roast it, and then
Okay.
they But I never tried it before, but it's it's like a specialty coffee. But I love coffee.
All right. So next question is iPhone or Android?
Android, 100%. My wife has an iPhone, but I'm Android.
Android.
Um,
Okay.
yeah.
Favorite ice cream flavor?
Um, that's a good one. I love wow. So ice cream, I love green tea ice cream, but you really don't get that anywhere. That's probably like my favorite if I could get that. Otherwise, I would get I actually like this new one actually. It's now that I'm plant based. I get this it's like this vanilla soy ice cream from Trader Joe's. It's addicting. The other
Okay.
day, it's amazing. It's like I think my new favorite one
Never
right
heard
now.
of that. Vanilla soy ice cream, huh?
The soy ice cream at Trader Joe's.
Oh, okay. I
One
gotta try that out.
one day, the other day it was gone. I think I don't know. We both ate it.
All
Like
right. So
night. Yeah.
last question is your number one or top three. List one of your top three bucket list.
That's a good question. So really, really, it's with Gracie and I, our goal was to like travel more. Like we want to go to Israel. We want to travel more before we settle down and have kids, but really want to go to Israel. Like that's like the where everything started. Just travel. Our goal is just to travel, like to go different countries and
Is there a specific place that you like? You really want to go that's like on your bucket list, like
Israel.
Israel?
I think Israel's like a 2021 goal next year. Like that's our goal.
Okay, cool.
Yeah, never been there, but I'm Jewish and never. I missed an opportunity to go for free.
All
Like,
right, all right, all right.
like
Actually, there's one more question that I want to ask, because this might describe this might kind of help me to describe who you are. So, if you were an animal, what would you be?
what's the right answer?
There's no right answer.
So I like an animal. It would be pretty cool to be able to fly. To be honest with you, like a bird or something, just to be able to free, like just to fly somewhere. Like a bird. I don't know what kind of bird though, but I think that sounds pretty cool. Like I always thought it'd be cool to be able to fly.
Okay, all right.
Personality test. I don't even know if that's
Well, that would actually more be like, if you were an animal and you would try to describe who you are, what would you be? You know, that
yeah.
now actually if somebody asked me that question, I would have a hard time answering myself.
Yeah, because I don't know, like, because I was like, oh, a lion, because I want to be a king of the jungle. But honestly, I think it's cool just to be able to fly.
Yeah,
Like,
yeah.
if I could just fly, you know.
All right, cool, cool. All right, so what I'm gonna do is pretty much, the interview's over. I'm gonna just probably cut it off around this time. Usually, if I did a live, we would have just said, we're done. So I'm gonna, before we end, I just want to make it up. Just so if anybody has any questions for Adam, what's the best way for people to get in touch with you?
Um, I mean, you could call me on my cell phone. I mean, just
No,
don't
don't
prank.
give out. so, so,
I've, I've had that happen. I don't know. I had this one person who called me from a private number, and I'm like, it's crazy.
I so
Like,
I think yeah. So typically,
you can call me on my cell phone, 908-202-3574, office line 732-858-1758. You can email me at adam@levinecapital.com. I have my other email, adam@thearchivegroup.com. You can hit me up on like Facebook, LinkedIn, YouTube, Instagram. I think I'm pretty easy to find. I mean, I'm
okay,
not.
cool.
um, yeah, so I'm out there, I guess.
All right,
Yeah.
all right, sounds good.